we have seen the markets go down pretty much only on Mondays and Fridays. Tuesday, Wednesday, Thursday, we've been up. What's today?
It's Thursday. It's Friday Eve.
Thank you, but I don't think the market's supposed to go down today.
Oh, that's a good one.
Market doesn't care what it's supposed to do, does it?
Past performance doesn't dictate future performance.
He said that before.
Can you tell I used to be an RIA?
That is very true. Dominic, that's Dominic Chu, by the way, and it's time for Market Navigator.
Yes, let's talk about what we're going to navigate through today, Brian, because energy stocks are where we're focused. They're off to a hot start in 2025. The sector is trying to recover after being one of the weakest sectors in the last 12 months. So our next guest thinks that energy is poised for an upside breakout and could be the biggest winner in the next 12 months for the entire S&P. Joining us now to make sense of all of it is Carter Worth. He's the founder and CEO of Worth Charting, a guy who looks at those charts and those patterns for a living. And he's got the spectacles on today, which means he's probably paying particular attention to all those ticks up and down. So take us through what the energy thesis is from a technical perspective and why it's, in your mind, due for that big upside breakout.
Sure. Thanks, Dom and Brian. Taking a break from the contacts. But yeah, so look, this has been a dud, as all will know, the past 10 years. In fact, the sector's up a mere 10, 15%, where the S&P has doubled, and obviously a massive underperformer over the past 3 years. But I think that's ultimately the opportunity. It's a high beta sector, and yet a very small sector at only 3.2% of the S&P. But let's get to it. Let's look at a chart or two and see what we can figure out together. And so what we know, of course, is it's a very important sector, while small, but all of the charts would indicate that this sort of stall, this period of going nowhere, is likely at an end. And so what you see here is a two-panel. The top is the S&P 500 energy sector itself, and the bottom is the energy sector's relative performance to the S&P. So we've been going up 22, 23, 24, albeit barely, but the relative performance is almost straight down. Now let's look at this same two-panel chart another way, second iteration, and you'll see here, as I've annotated, that the presumption is energy on top is going to break out from this 2-3 year range, and then that would also, I would see a concomitant move in the relative performance. So let's zero in, if we could, on just the top panel and look at what is a chart of the S&P 500 sector itself. And you'll see here on this next iteration that what we have is a classic setup for something that's had a big move. I mean, a massive outperformer since the COVID low, having been a disastrous underperformer going into COVID, that now after 3 years of sideways, to my eye, by my work, is poised to break out.
Okay, so that relative outperformance could lead to, again, outsized gains for the broader energy sector. But are there places in particular that you go to specifically that could be the outperformers even within that possibly outperforming sector?
Yeah, I mean, two favorites, Exxon, by virtue of the fact that it has been so dormant, very similar to the sector itself, but is really a safe haven asset within the sector and the largest. And then LNG, liquid natural gas, a nice symbol there for Cheniere. And the presumption here is that this, having been one of the strongest stocks, recently has dipped almost 20%, and the dip looks to be a buying opportunity.
All right, so is there anything that we could say policy-wise? I mean, you're not a policy fundamentals guy necessarily, but what would happen in your mind that could make this whole thing go off the rails?
I don't know. I mean, I'll default to what you just said. It's just not a part of my work. There are a lot of people spending time on politics and policy and studying OPEC and studying that. And
I know one of those people.